ladies and gentlemen, I hope you packed your moon boots because it looks like 2023 could be the year that Palantir rides that rocket ship straight up to the moon. Oh boy. Now, all joking aside, I just want to remind everybody, all right, this used to be a $35 stock, okay? It plummeted like 80% down into the low sixes if we look to last fall or winter. And I personally, sold some puts in this area here. Got assigned, I think, assigned 650, but when you subtract the premium, my basis ended up being like 622 on this stock, okay? So practically picked the bottom, all right? Now, anybody that says they can consistently pick the bottom is probably full of it, and I'm not saying that I necessarily knew that we were near the bottom. I just knew that the stock had entered a price range where I felt it was starting to make some kind of a sense as a small position in the portfolio. And, granted, with this rally, there's a small part of me that says, hey, I wish it had been 300 shares or 500 shares. But hey, it's 100 shares. And since it is currently my biggest percentage gainer in 2023, I figure it warrants more coverage, all right, and more thought. So looking over the financials, I just want to point out this revenue growth. I would be happy pretty much any company in my portfolio producing this kind of revenue growth. I don't want to take anything away from them. That's amazing. It may be slowing down. We'll see. I mean, as time goes on, revenue growth slowing down eventually is pretty much considered an inevitability for any business. We'll see how long they can keep up the really high revenue growth numbers. I mean, granted, it started out near 25%, jumped to almost 50%, then dialed back down to 40, and then 24, 25ish there again. It could have another year of 50%. It could have another year of 25%, or it could drop to 11% or 10%. Don't really know. The future is, as they say, uncertain. But I don't think that they're done growing by any means. Just it depends on what pace they can grow at. And when it comes to the profitability of Palantir, this is really where things start to get interesting, and I think why we've had this massive rally. So things started off pretty deeply negative, as you can see, and slowly seem to be trending towards positivity. Now, if we stretch out the EPS and free cash flow onto a quarterly basis, you can see a little bit more clearly that on free cash flow, they've had a pretty decent streak of positivity, but earnings has kind of lagged that and been still stuck in the negatives. They've been losing a nickel here, a few pennies here, a dime there, right? Now, recently, they've had a couple quarters where both EPS was slightly positive and free cash flow was positive and, actually doubled twice quarter over quarter. And, I like to see that when I'm in a stock, love it. And the market does too, and that, hence the rally, right? And hey, these gross margins, everybody likes to see gross margins above 75%, don't they? I mean, that's so nice, especially when paired with high revenue growth, okay? Because that just translates into more and more on this bottom line of, EPS and free cash flow as time goes on, hopefully. But hold on. It's not all sunshine and rainbows, okay? There's something I think I would be foolish not to notice and not to point out, and this was one of my hesitations on why I needed the stock to drop basically 80% before I was interested, and that has to do with dilution, okay? So when you have your shares outstanding in the low to mid 500 millions and you're growing it in the high single digit to numbers to achieve 25% revenue growth. Okay, revenue growth at first there was outpacing the growth in shares outstanding. However, in the long run, over these 5 years that we have history for, we've gone from 500 and change in shares outstanding to over 2 billion shares outstanding. So call it a quadrupling-ish, just under 4x, okay? That is a massive, massive jump, okay? Massive. Basically, that means, like, let's say you owned your own business outright, 100%. This would be like you took that business and took on 3 additional partners and gave them each 25% and left yourself with only 25%. If you were a shareholder back in the early days when it was just in the 500 millions of shares outstanding, that is essentially what has happened to you. You have now shared your milkshake, for lack of a better term, with 3 other individuals, okay? Now, that is just a little bit disappointing when you see that the revenue growth in that same time frame was just over 3x. So the shares outstanding has overall actually outpaced the revenue growth. But I think the hope is that with that high gross margin, that revenue growth becomes more and more efficient as they scale larger and larger, and it will still translate into higher EPS, higher free cash flow on a per share basis. Now, this business, since it does now have positive earnings, positive free cash flow, etc., and on their balance sheet has $2.6 billion in cash. Yeah, the risk of bankruptcy, the risk that this goes to zero, is, in my view, exceedingly small. Okay, so yeah, I think that also factors into people being a lot more comfortable putting their money back in here. Okay, because you've got this streak of positive free cash flow, and now a couple of quarters where both earnings and free cash flow have been positive, and 2023 guidance has been raised, and praise be. And honestly, they also don't really need to issue shares to fund their ongoing operations, because why? They bring in more cash than they spend, and their earnings on a GAAP accounting basis have gone positive. But what they do need to do is issue those shares to their talent. All right. So stock-based compensation is a big chunk of what is driving the talent towards this company, and that's why they've been able to have positive free cash flow with negative earnings in a lot of these quarters, because hey, it counts that like the fact that they pay their employees in shares of company stock shows up somewhere, but it's not a cash expense. So their free cash flow still ends up being positive, even though they paid out all this money in stock-based compensation. And if you look at this stock-based compensation, that's really, I think, the elephant in the room here. I think as time goes on, they need to figure out a way to get this to a more reasonable level, because honestly, I think this amount of stock-based compensation is not sustainable, and it dilutes the investors, right? That's the big issue there. And this is why I'm honestly happy with only having a small position in this company, because whether or not they can keep growing the company at the level they have been and get that earnings per share and free cash flow per share, because the per share number is what counts, especially if you're being diluted. You want to see that the amount, your piece of the pie is still getting more and more valuable. And if they keep doing this, I can't say that for certain, right? The uncertainty is the reason why I would rather this just be a small position where, hey, if they round the corner and they still keep, and they can, the growth in the bottom line can outpace the effect of this share-based compensation. Maybe they can shrink this some, maybe do more of their compensation with actual money because their gross margins are so high and they're producing. Okay, that's how they make it happen. But as it sits, I'm comfortable with the position I have. I'm not looking to sell even though I'm up massively. It's a long-term thing for me. I'm hoping that, one day this, maybe this is the next, next Google or next Microsoft or something like that, right? 20, 30 years down the line. I'm not really interested in just flipping it for a quick buck. That's not how I operate. But still, whether or not they can do this is rather uncertain, and I'm going to be watching them closely and keeping an eye on them to make sure that they can. So if you have shares of Palantir, let me know in the comments below what you think of their financials. Are you worried about the stock-based compensation? How do you feel about the rally? Do you wish you'd loaded up more and dollar cost average more when they were near their bottom? Join the Discord. I will link it in the description if you want to have a more lively discussion with me on that platform. And subscribe to the channel if you would like to see future videos on companies like Palantir that I hold in my own portfolio. Take it easy, everyone, and have a wonderful and safe weekend.